Today's the second.
Second week. It's the second Monday. The first week, you guys, met with Tommy on day one. Then you met with Casey and learned the phones. And then the rest of the week, we basically went over no-cost benefits, right? Guys learned the no-cost benefits a little bit. The discount card, child safety kit, family information guide. We go over all that already?
Yeah.
Okay. So basically this week, we'll learn the second half of the presentation, which is like the insurance moving forward, right? It's the fun stuff. It's what we're here for, going over insurance for people and protecting them. But basically, just to kind of recap, we're all the way through the first week. You guys should be doing about 50% of the presentation with your manager right now, if not the full thing like you just did, right? So, if you're not at 50%, then you got to have a game plan by the end of this week that you're doing 100% of the presentation with your manager. And that means from start to finish. They're just watching you, critiquing you, helping you guys get ready to get released within a week. Like it should be 2 to 3 weeks max of training. If you're here longer than 3 weeks of training, you're behind, and that's your fault. At the end of the day, because you just weren't putting in the work. So today we'll talk about whole life and term, and then the needs analysis. Right. So after the family information guide, we transition into life insurance. Now, a lot of you guys we all do our own drawing. You heard, hey, you might not do it the same exact way. A lot of my stuff is on the computer. I will actually pull it up and kind of show you guys what we go through, but I'm going to do it on the board first. Basically transitioning into life insurance. In the script, it says, now it's 2020 and most people have life insurance. However, what we found out was not everyone knows what they have or how it works, right? So there's over 48 different types of life insurance. I'm not going to sit here and name them all, but they fall under the 2 umbrellas of term, which is for the if in life, and then the other type is whole, and that's for the win in life. I'm sorry I erased my board because I need this for my team meeting. But anyways, term, if you pass away while you have it, you're covered. Anything that people get offered through their job will always fall under this category. Okay, if they're like, yeah, I got whole life through my work. You don't got whole life through your work. It's like
Never, right?
never, like 1% ever would ever have it. You know what I mean? And they're usually like state workers if they got anything that they can keep. So term typically works in periods of 10 years, periods of 20 years, periods of 30 years, right? It was initially designed for mortgages, right? So basically, I'm going to give you an example of a 10-year, $100,000 policy. So say you wanted $100,000 in coverage. Well, if you started that policy at the age of 35 years old, which is like a midway point for our lives, right? You'd be looking at about $1 a day, $30 a month. Okay. Now, 10 years would go down the road. 10 years would go down the road, and you would hit the age of 45. Now, when you make it to age 45, obviously you still need the coverage. What do you think happens to the cost if you want to keep it? Yeah.
It goes up.
So I always like to ask questions. Those are the questions that I'm asking to the client. I'm not asking you guys. I'm pretending like we're in a sit.
Mm-hmm.
So 10 years go down the road, guys, make it to 45. You still want to keep that coverage? What do you think happens? You think it'll go up, go down, stay the same? They're always going to usually say go up. If they say go down, I'm not going to be like, no, you're wrong. You know what I mean? Like, yeah, you're close. But actually, it goes up and it doubles to $60. And then 10 more years go down the road, guys. You're 55 years old. You obviously still know you need that coverage. What do you think happens? Doubles again, right? Now you're at 120. And then all of a sudden, we make it to that age of retirement, pensions, 401k, Social Security, right? You finally start drawing after all the years of history. And what do you think happens when we reach this point? And I'll let them answer. It will go up again, right? And I'll agree. I'll say, yeah, you're right. They'll either raise it right through the roof or we can't afford it by 120, or they'll just cut you off and say you're no longer allowed to have it. So we consider term like renting. Families will pay into it over the courses of their whole entire lives. They'll make it to that certain point, and then they give the keys back to the landlord. There's nothing left. Now, I'm not going to bash it, to the client. A lot of people bash term. Term's good for certain things. It's good for income protection. It's good for mortgage protection. It's good for child education. It's also good for debts. insurance. Whole life, right? For the win in life. It's inevitable. We're all gonna die. Don't be afraid to say die to your client either. We're all gonna die. Unfortunately, none of us know when, right? So same person, 35, 100,000 for them might cost a little bit more. Let's just say it's $100. But the difference is once you get it, locked in for life. You can be 45, you can have a heart attack, you can get cancer, you can make it all the way to the age of 100 years old. It's still locked in at that $100 a month, and it pays out 100% of the time when you pass away. It's also one of the only benefits left in America. So we pay taxes our whole entire lives, they'll give our families tax-free. Okay? Now, I'll ask the client, do you understand the difference between whole life and term life? If they still say no, which is like very unusual at that point, that just means they weren't paying attention at all. I'll say, all right, it's as easy as this. Term is like renting, whole life is like owning.
I got a question. So when you get the payout from term, it's there's no taxes also, right?
It's tax free.
Okay.
Yeah. All right, so if they're confused, term is renting, whole life is owning. It's so simple. Just keep it simple for your client. You know, we can dive into more, like I'm going to, just so you guys have the background of it. I don't know if there's any energy drinks in there, but there's a pop if you're tired.
I got one sitting across and I got this.
All right, but thanks. Yeah, I was gonna say there's some stuff in there.
Where did you read the Sunday one already?
So you guys know, okay? All right, so just to recap, term, let's just pretend you have a bucket here. I mean, this is gonna be messy. Let's just do this. Screw it. So term, you have a bucket. All right, you're putting that money into that bucket every single month over the course of all those years, right? And it's going towards something called cost of insurance. You're paying for the cost of insurance. You make it to the age of 65, a hole would end up going in that bucket, and all the money goes back where? To the insurance company. You don't get nothing. Now with whole life, you have a little bigger bucket. You're putting a little bit more in there every single month, right? Same amount is going in towards cost of insurance. You can't get around it. You still got to pay for the cost of the insurance. But now there's another category in this bucket, and they call it cash value. Now, cash value is like a forced savings account for the clients, right? And it's growing their money at a fixed rate, 4.5%, 4.5%, while it's protecting their family. So some people that are in their 20s and 30s, they can actually make some money on their policies. When they're in their 40s, later 40s, early 50s, I'm not so much telling them about their cash value because it's not so much of an investment, right? They might have like enough to pay the water heater if it blows up in there, you know what I mean? But it's not going to be anything crazy. You know, people our age, we can get, you know, $20, $30, $40, $50,000 out of our cash value if you get a certain policy. But when you're in your 40s, it doesn't have enough time to grow. So there's usually like less than 15, 20,000. You know what I mean? It's nothing crazy to be like, hey, look, you know. And you know, basically with term and whole, I don't really do this, the buckets, unless they're like real confused, a little bit confused, or if they're younger, if they're like in their 20s and early 30s, I will let them know about this because now they're looking at this like, okay, now it's more of an investment. I'm going to grow a guaranteed interest rate. And you know, it makes more sense. So I'll get into it more, but you know, term and whole. Any questions so far? Term, whole life, pretty easy, right?
Do we have a specific number for our whole like interest?
4.5%.
Okay.
All right, so let me erase this.
I have a question.
Yeah.
So what is a paid up option?
Great. We're gonna do that. Okay. So with whole term does not have paid up options. Whole life has paid up options, cash value. Okay. And paid up options are basically just like as they're paying into it, every month it's like equity in the house. Some money's getting paid off on it. You know what I mean? You're still gonna pay for that cost of the insurance. Some money's gonna go towards the cash value. Some money goes in towards the paid up value, right? All right, so term and whole, we just went over that. Now, basically after that, we got to transition into the needs analysis, right? So I just educated them on term and whole. And I'm saying, all right, guys, well, your last no cost benefit is your needs analysis segment. What I like about this is it takes in consideration your current situation and it determines if there's any gaps in your coverage. If there's any gaps in your coverage, it's going to show you what it recommends. However, if there's no gaps, nothing will pop up. And I'll do a quick little circle here. I know everyone got their own little thing, but I do this for them before I do the computer too. So before I run the computer needs analysis, I do it like on paper, let them see like what their situation is. And it actually helps me gather a lot of information from when I'm typing in on the needs analysis. I already have some of it. So, you know, I'm just going to use the little pie chart. It's pretty easy. There's basically a list of concerns, right? So, you know, your group, they go through contract negotiations, and every few years, you know, the groups get together and they come up with solutions to problems that the members are having. Well, this time around, the members brought a list of concerns to the board, and there was actually 6 of them. The first one was the lack of permanent and portable protection. Guys, all of our benefits aren't really member-owned through work, right? So we're not in complete control. Somebody else is. You know, you're not in control of your pension. You're not in control of everything that's set up through your job, right? And that was a major issue. The second area was for funeral and final expenses. So then I ask a question. Joe, did you ever think if anything were to happen to you, would you want to be buried or cremated? And if you don't know, I'm going with the higher one for one, all right? So if he's like, I don't know, I really never thought of it. My next question would be, okay, well, do you know how much an average funeral costs? I want to ask questions. I want to get these people engaging with me during this period because this is where I'm finding out all the information and where they actually need coverage. All right? So, funeral and final expenses. Joe, did you ever think if anything were to happen, if you guys would want to be buried or cremated? No? Okay, do you know what the average funeral costs nowadays? Whatever they say, I'm just going to say, yeah, you're close. I'm not going to be like, no, you're wrong. You know, I've had trainees like, nope, you're wrong. You're wrong. Nope. It's actually this. I'm like, no. so 10 to 15,000 is what the average funeral costs. Okay, that's today. Now cremations, just so you guys know, are 3 to 6. Let's just say. I was like, giving me an extra $1,000, right? So basically, 10 to 15,000 today. You know, you guys are only 30 years old. I mean, in 20 years, we're looking at 20 to 30,000. And then God willing, give us another 20 years after that, right? So when we pass away, our age group here, we're looking $40,000 to $60,000 for a funeral. And this is the only area that the company is going to recommend whole life for this client. So when you run your needs analysis, the only place they're going to recommend whole life coverage is for funeral and final expenses. It's the only place. So, you know, basically, if they're in their 20s, 30s, I'll show them 40, 60 grand is what you're going to need as a minimum. You know, if they're in their 50s or 60s, you know, we can maybe stop around 20 or 30, right? Just to kind of, because the price is going to be really high. You know, in cremation, I'll just double it for them if they're like 6 to 12 and then 12 to 24, right? So funeral and final expenses, right? We all have 2 guarantees in life, death and taxes. And I grew up in an area where I'd seen people get around taxes, but I never seen anyone get around this one, right? And they all laugh, right? The next area of concern was for the loss of income. You could ask them, Joe, how important is it for you to make a paycheck this week? Pretty important, right? If you weren't to come home, you know, if you missed a paycheck or 2, that would probably make things a little bit tough on your family, right? Imagine if you weren't to come home. So basically right now, you know, whatever you're bringing home a month, you know, we figured that out on the needs analysis. I'll say the company will look to have anywhere between 3 and 5 years of your income protected. And then here's where I get them. So Joe, do you get any life insurance through work? You do? Okay, how much do you get? If they're union members, they get like 10 to 20,000, depending on their group, right? Some people will say 1 year of my salary. I sat down with a guy on the other day. He's like, yeah, I get 3 years of my salary if I die. It's like, that's phenomenal. You're like right where you want to be, right? But whatever they get through work, spend it on the income. Spend it immediately. If they're like, yeah, I get 100,000. You're like, okay, great. How many years of income is that for you? 2, 3? It's 3 years? Okay, so he's making 30 grand a year, right? Okay, so you got 3 years protected. The expert simulator recommends 3 to 5. You're pretty much right there, you know. And I'll let him know, like, you're pretty much right there. Like, if he has none, I'll say, okay, well, basically we have to have 3 to 5 years protected. That means if God forbid something were to happen to you, Joe, Mary, it's going to be hard enough without him. Imagine without his paycheck. So at least you'll still have his paycheck coming in for the next 3 to 5 years to give you time to adjust, and you won't have to go to work the day after losing your best friend. You can grieve for a little while, right? And then you gotta like hit them with that stuff too. Like you won't have to go to work the day after losing your best friend, because guess what's gonna be due at the end of the month? Bills. You know what I mean? Bills don't care that he died, right? Comcast doesn't care that he died. They're gonna send them one more bill. You know what I mean? AT&T, if I die, my family's getting one more bill. You know what I mean?
Yeah.
So basically 3 to 5 years. Most of the time, we're going to be using term protection. Okay? And I'm just letting you guys know like where you would use these products as well. The next area of concern was for the mortgage. Joe, do you rent or own? You own? Okay. Ask smart questions. Okay. How long did you live here again? You've been here 3 years? When you took out your mortgage, did you do a 15-year or a 30-year? There's really only like 2 types of mortgages, 15 years and 30 years. I rarely ever see a 20, okay? So when you took out your mortgage, did you do a 15-year or 30-year? He's like, most people do 30 years. There's very few people that do 15, right? So he does a 30-year mortgage, right? Well, and he told me he's been there for 4 years. Just do the math for him. So you have 26 years left on your mortgage, right, Joe? All right, and then what'd you buy the house for? If you're like, you could ask him this. You could say, how much do you have left on the house? If they're like, oh, I don't know. Then say, how much did you buy the house for? They're not going to forget that one. You know what I mean? Oh, you bought it for 300K? All right, great. Now just write the whole 300K in there. And then I'll say, hey, look, if something were to happen to you, do you have mortgage protection in case of death? And just know this for you guys, when they buy their house, if they put down less than 20%, the bank, whoever they get the mortgage through, makes them get what's called PMI protection. And that does not protect them. It protects the bank. Okay? So it's not mortgage protection. It's like, yeah, the bank made me get it. Like, yeah, they want to protect them. It's not protecting you at all. So mortgage protection is true mortgage protection. They'll know because they're paying for it.
So a bank would never give you any sort of protection like that, right?
They'll offer you to get. You can have mortgage protection, but most of the time, like in 2008, 2009, when the whole stuff crashed, they quit offering it for a while. I think they just started offering it back up like 2-3 years ago, to be honest. But most people don't have it. So just hit them with that. You know, if you passed away, Joe, do you have mortgage protection in case of death? Almost all the time they say no. Yeah. Okay. And then when they say that, here's where you get them, right?
Mhm.
So Joe, I'm assuming if something were to happen to you, then Mary, you'd be the one responsible for the mortgage. See how I did that? So I just created a problem for him.
Something they don't expect.
So Joe, so you're saying if something were to happen to you, then I'm assuming Mary, you'd be the one responsible for the mortgage? Yeah? Okay. That's a little bit. And then the last area of concern, guys, is for your child education / debt. I'll ask them. You know, you got 2 kids. Joe, if you want, and I hit them with this every time. Joe, if you want your kids to go to college, great. Some people are, if they want to go, they can pay for it. I get around that now. I used to get beat on that all the time. I never was able to get child education or nothing. So I'll be like, Joe, if you want your kids to go to college, great. But if you're no longer here, can we give them an opportunity? And what do you think they're going to say? Yeah, they're not going to say no. You know what I mean? Their kids are like their pride and joy. So you have 2 kids, they say roughly around 100,000 per child for them to go to school, and that's now in-state. I'll be honest, I went out of state, went to West Virginia, it cost me over 100 grand. I'm still paying, I mean, still not even done yet. You know what I mean? Like, so basically, and then any debts, I'll ask them, like, if they don't have kids, but you got any student loans yourself, any major credit cards that would be left to your family if something were to happen? No? Okay, great. All right, now, we got our needs analysis pretty much laid out. Check this thing out now, ready? So guys, Joe, Mary, they always make me ask, if you only got to pick one of these 4 things to have protected, if God forbid something were to happen to you, what's the most important to you? And there's no wrong answer.
Income.
Income? Why'd you say your income?
Just a lot of money.
It's more money than everything else.
Just, yeah, I guess relevant money for, I don't know.
Okay, and why would that be important to you? Like, why would you want the, like, you know, it's the most money, but why is that important to you? I'm gonna make them sell themselves, one or the other. I'm gonna ask them why, and I'm gonna follow them up with why is that important to you? And I'll make you sell it. And then after I ask him, I say, now Mary, something were to happen to you, what would you want to make sure is protected for Joe and the kids?
Funeral and final expenses.
Funeral and final expenses? Why did you say that?
Because I wouldn't want my family to worry about funeral right after I pass away. Just get taken care of, be done with it.
Okay, great, awesome. Most wives, I'll be honest, they usually say child education. Most husbands say one of these 2. Unless they're like older, like 40, like 48 to like 60, they don't really thinking about funerals. Just being honest. But great. So I circle it, and guess what, guys? The 2 that I circled, they're getting them ones at least. They're at least getting. He's at least getting income protection, and she's at least getting funeral and final expense protection. You just told me, and she sold me on why that's important to them.
I like one thing that Tommy showed in one of his videos. It could kind of be applied for on any of these, I guess. But he like tried to find out. He like just used the random number basically. Like let's say you make like 30,000 a year or 40,000, and then he multiplied it by like a certain number of years. He's like, if you died right now, you'd be missing out on like 1.1 million in the next 20 years.
Yeah.
And it like really makes him think like, oh, I didn't know I was like worth that much.
Well, that definitely with the income. You know, I always like to figure out, in which we're going to get into next on the needs analysis, how much they actually make. But you know, they're at least getting these 2. Guys, this is where your sales make. When you literally go over to Circle and you say, all right, guys, they always make me ask, if you only got to pick one of these 4 things to have protected if something were to happen to you, what's going to be your most important? This is the most important part of the closing process right here, when they pick. And when they pick, you say, okay, you circle it or do whatever you need to do, highlight it, and you say, why did you choose the income? And they answer. And then you say, well, why is that important to you? And it's done. He's sold. He's getting income protection. And give them what they want. Don't try to switch them like, oh, he wanted income, but I was trying to sell a funeral. Dude, I've seen people lose sales because of that. You know? Like, the guy literally was like, I want my income protected, and the guy's over here trying to sell him 20,000 the whole life when he needed 400,000 a term. You know what I mean? So give them what they want if they want it. But then obviously try to get the whole package. You know, that's your A. And then, at least seize the income protection. Okay? So, you know, basically the 4 things, we just went over that. Now, I got all the information I need in my tool belt now to run my needs analysis. And I'm going to screen share, and then I'll turn this computer around. Hopefully it didn't freeze. Hold on here. Mouse is starting to work. All right, so screen share, needs analysis pops up. Boom. You guys are going to, I'll put it right here. So you guys should be able to see the needs analysis. If you haven't seen that on eApp. Now, one thing at the top, try to get this information in before you get to this point, because it can take an extra minute or 2 just to type in their address, phone number, and all that good stuff. But basically, this top info right here is for the AIL Plus card. The company just put it on there, and they make us do it now. So like I said, just try to do your homework ahead of time and get their information in. I'm just going to give us some bogus stuff. 123 Happy Street. And address. Oh, I put that in the wrong area. joe@aol.com. Wonder if that's a real address. 123 Happy Street, Chicago. Okay, and then basically Joe's in there because we put him in the beginning. Then you guys got to enter the wife. So Mary Smith, her birthday. So that's why I said, like, if you do your homework a little bit ahead of time, sometimes it speeds this extra 2 minutes, saves you 3 extra minutes, right? And then Joey Jr. Smith, we'll put a kid in there. And then we'll put another one in.
Doesn't matter what order you do the kids.
Great question, actually. Oldest first.
Oldest first.
Oldest child first on the needs analysis.
All right, that's good.
If you mess that up, you'll be kicking yourself in the butt because you'll have to fix it.
Like,
All right, so we got the whole family in there, right? Now, guys, just a couple and then build this thing up, right? So ask them, this is your last no-cost benefit. Have you guys ever been to a financial advisor before? No? Okay. Well, if you ever were to go to a financial advisor, what they would do is they would put in place a plan for your future. And before they put that plan in place, they would look to make sure the plan was protected. Because if something were to happen to you, the plan will never go through, right? So basically, most financial advisors will charge their clients anywhere between like $600 and $1,000 a year to run what's called a needs analysis on them. Because you're a part of the union, they actually set this up for you at no cost. So if they're like a child safety kit, because we were able to get the child safety kits out to you, the police unions actually unlocked this benefit to you as a way of thanking you for protecting your children. If they're a will kit, it's the same thing. What we found is most of our members didn't have a needs analysis set up. It was costing them thousands of dollars a year. So they actually set this up for you guys at no cost for getting your will taken care of. Just finesse it, okay? So we got everybody in here and build it up. You got to build it up. Like, make it sound so important. Like, that's why we put it could cost members $600 to $1,000 a year to get one of these. Because now they're like, okay, like it's a good benefit, right? But if I'm like, your last benefits, your needs analysis, I'm gonna run it, we'll get out of your hair. They don't know what the hell this thing is. You know what I mean? So build these benefits up, all of them. No cost benefits to this, okay? We get this first couple people's information in here. Family member medical questions. And this is just based on the 4 of them, right, in the house. I'm not asking about their parents or their grandparents. It's just them, their immediate family, right? So any internal cancers in the past 2 years? No. Any insulin diabetes? Any cardiovascular diseases? If they click yes to any of these 3, they're disqualified. Okay? So just be smart with it. The next area, do you use any oxygen? Any terminal illnesses? Any Alzheimer's? In the past 12 months, have we used tobacco? Don't mess that one up. If they're tobacco users and give them non-tobacco rates, you're going to kick yourself in the butt. Because 1, you would have made more money. But 2, when it comes back and it says that they're a tobacco user and their rate went up $15 or $20 a month, now you have to get the approval from the client. And it doesn't always work out. Doesn't always work out. It's like, oh, share extra $20. I don't want this no more. Screw that.
that question.
How did it happen?
You said the first 3 automatically disqualify them. So what happens if they answer yes to one?
And they're automatically disqualified.
You let them know, like right off the bat, like as soon as it's there.
I mean, depends on the situation. Depends on the situation. But like, if the husband said yes and the wife's no to all of them, then I'm gonna like really focus on doubling up the wife. I'm switching my. You got to figure out where you're going with everything too. You know what I mean? Like, if the wife can't get it, then I'm doubling up on the husband. If they both can't get it, then I'm going big with Head Starts. You know what I mean? Like, we're figuring a way out because there's a cell in every house. Okay. So basically, if this is the only one that they could really answer yes to without disqualifying them on those first like 6, 7 questions is tobacco. Tobacco is really the only one. Get the honest answer. If they're sitting there smoking a vape, that's tobacco. All right. If they smoke weed, it's tobacco. There's no, you know what I mean? Don't put tobacco, don't put weed on page 2 of the super combo. Just mark it as tobacco. And then, you know, basically, guys, with this stuff, like I said, just be thorough, because when you're submitting your applications, like, home office is going to find all the information anyway. So you might as well just do it as thoroughly as you can, right? Not mess it up. Next couple questions. Family member non-medical questions. Currently on probation or parole? If they're on probation or parole, okay, I don't know what's going on. If they're on probation or parole, they can't get it. They have to wait. Okay. I've had situations though where like my guy was like, dude, I had like 8 speeding tickets and they had me on probation for it. I'm not putting it on the app. All right. But if the guy's like, yeah, I just got out of jail. I freaking robbed a jewelry store and got me a grill. Right? You guys know who Paul Wall is. Then I'm probably gonna have to put, you know, he's on probation. He's probably not gonna be able to get it because he's robbing stores with like armed. Yeah, so it's like a more like, you know what I mean. But if it's something like speeding tickets or child support, give him a little leniency. Talk to your manager. Call your manager in the house.
Like a DUI.
That was the next question. Any DUIs or DWIs? Arrested or convicted of a DUI? If they say yes, it's fine. Hopefully they only have 1. If they have like 2 or 3 within X amount of time, they can't get it. But the cool part is our company has an exclusion rider. So if they have 2 DUIs, you can pull up this alcohol exclusion rider, have them sign it, and then if they die drinking and driving, their money just goes back to their family. It don't pay out. Well, don't be drinking and driving, dog.
Yeah.
And I'll tell them that. I'll be like, dude, listen, everything else checks out except for, you know, your 2 DUIs. They just want you to sign this alcohol exclusion rider. You're not gonna be drinking and driving, right? That's why I have them.
That'll set them straight.
Yeah.
Does it want to change the price though?
Nope,
No,
nope.
the fact that he had them,
If you have them sign the alcohol exclusion rider, you're good.
they'll basically wipe that from it.
Yeah, because
Okay.
if he dies while drinking and driving, the money just goes back to the family.
Cool.
Now, if you don't have him do it, then it's possible he can get raided, you know, and then you got to prepare him for raiding. Next questions, household information. So here we go. Here's where we find out the money. So you and your spouse's take-home pay. Joe, how much do you bring home a month take-home? Just get me close. That's what I tell him. And he'll be like, take-home? Yeah, take-home. Like after taxes? All right, let's just pretend he makes $3,200. And then Mary, you only do part-time. Mary Kay, you make $1,000 a month. Okay. All right, Joe, how much life insurance do you currently have through work? That's the next question. Oh, you got 10,000 through the union. Okay, and then Mary, you get nothing because you're part-time, right? Anybody who works part-time is not going to get life insurance through their job. They don't offer it part-time employees. Okay, so just know that. Next question: do you have any life insurance outside of work? I should know this already because we use the family information guides, so you should pretty much find all that information out there. If you don't find it out by then here you go. Right? Yeah, you do. You do have life insurance outside of work. Okay, great. Who do you have it through? Find out. If they're like, yeah, I got Prime America, you guys need to know Prime America's term. They ain't gonna have that shit forever. So I'll say, okay, you got Prime America. And I'll ask them. I'll play dumb with them because I like to mess around with people. I'll say, is that whole life or term? And the ones that say whole life, I'm like, oh, I got him. He's sold. But the ones that say term, I'm like, okay, great. How much is the face value if something were to happen to you? You know, and most of the time, let's just say he has 100,000. And then anything on you, Mary? No. Okay, great. And do your homework. If they're like, yeah, I got Prime America. Well, if you don't know, just Google it real quick. And you can look up the top products that they sell. It literally take you 2 seconds. Okay. If they don't have any, then say, all right, well, not if, but when we'll put that in there for you. Because you know we all need it, right? It's not hit on. You know we all need it, right? They're like, yeah. Gotcha. All right, next question. Do you currently rent or own? Let's pretend in this situation they own. Well, we did the balance, right? We didn't know the exact balance, but he bought the house for $300K. Come on. $300K. Interest rate on this thing does not matter. You can put in whatever you want. Just put in 3 or 4%, okay? And in years remaining, well, we got 26 years left. I just found that information out on my own loan needs analysis, right? And then look, that question comes up. Do you have mortgage protection in case of death? You guys said no. We'll keep it as no. Do you have any money saved for your kids' education yet? No. Okay. And then the last one on here is checking or savings. Always click checking. Okay. All right. And then basically you hit submit. Once you hit submit, dun, dun, dun.
So what if you ask them that last question, the checkings and savings? They need a checking, so what if they say savings? Like
You click checking.
either way. All right,
It's
cool,
always click checking.
cool.
If you click savings, it's
Gonna-
not gonna, yeah.
Yeah. turn
All
it
right, now look what pops up. So basically, this is a summary. It says this is for you to know. This is for you to know where it's going with the presentation, because now it's gonna start playing videos, right? Well, FE is final expense. GIO is guaranteed insurability option. IP is income protection. MP is mortgage protection, and CR is child rider. All right, so you know it's gonna offer all that for him, and then all that for her. So now you know in your presentation where you're gonna go with this stuff. All right. So continue. Boom. What pops up? Mandatory read-off letter. All right. This is very important. If they are a part of a union or an association that we get these letters for, right? Use their own union letter. They all have their own mandatory read-off letter. Use it. It literally has the title of the union at the top, and then it's usually signed by the president of the union at the bottom. So if you show them the union one, I feel like it's so much better than just this generic one.
Yeah.
Now, when you're sitting down with child safety kids and you're sitting down with, if you're sitting down with child safety kids and if you're sitting down with like will kids, then just use the generic one. All right. And read it to them. So it says, dear member, the insurance programs being offered you today are made available on a voluntary basis through the cooperation of your union, an American Income Life Insurance Company. 100% union label company with a long-standing history of serving union members and their families. We are privileged to provide insurance services to millions of policyholders throughout the United States, Canada, and New Zealand, and have more than $50 billion of life insurance in force. AIL supplemental benefits are not in competition with any group benefits through your workplace/employer, and they can complement any policies you already have. If you choose to take advantage of any of the programs offered through AIL, your benefits program is permanent and portable throughout your lifetime. If you qualify, your coverage lasts a lifetime and is your independent control. Once the program has been explained to you, we'll show you agree with the many participating members that it's one of the most valuable programs you've ever seen. There are several benefits available. Please take a few minutes to listen to the representative who's here visiting you. If they can help you in your needs in this area, we ask that you take advantage today. If not, we like your feedback and we'll ask you to take a minute to complete our officer report form so we can share this with information with your union to serve you more effectively. The reason why we're asking you to make this decision today is we have several thousand families requesting our programs, and we can only visit each family one at a time. We appreciate the opportunity to serve you and your family today. If I read the one on theirs, I'll say, and as you see here, it was signed off by your president, Joe Smith. You know, like highlighted on the screen, right? And they're like, okay. And then guess what you got to do after that? I just read that whole paragraph. Now guess what we got to do? We got to read a whole nother paragraph. It's called So Basically. So basically, Danny, here's the way that it works. Is if I'm going through your benefits and you're nodding your head thinking these are really great benefits, I can see why they had it set up and all the members were excited about it, then they're actually going to ask you to try and qualify today while I'm out here. But on the flip side, if I'm going through your benefits and you're like, you know, they are great benefits, but they just don't feel a need for me or my family right now, then we actually would ask you not to try to qualify. Either way, yes or no, that decision does have to be made today, just in fairness to all the other members waiting to enroll. The great part about the benefits is they're pretty much a no-brainer. So basically, the only thing they asked me to ask you is, as I'm going through these last benefits here, if you have any questions at all, will you stop me and ask me? Mary, you too? And I get verbal yeses. I'm saying, great. Either way, your group does still value your opinion on the officer report form. It's like my report card goes back to your group just to let them know I did a good job for you guys. And you can even throw in maybe a Google review there. You know what I mean? All right, so after the letter, boom. You don't even gotta think. It's right on the screen. What do I do next? What do you do next, Dan?
Well, let's examine the need for final expense protection. So go over all those.
That's all you gotta
needs, right?
say. So,
All right.
just, all right, Joe. Let's examine the need for final expense protection. Just play the video.
Oh, okay.
Gives you a second to breathe. You just talk for a minute, right?
Hmm.
Now my volume's down. I thought it was, but basically, I like to show. This is like the one video I play. I play the whole thing. It gives me a second. I just talked for like 2 minutes, 3 minutes, right? So it's playing this video. It's going through everything. Elise, your agent number just came in right now.
I am so hyped right now.
It literally just popped up on my screen.
That is so cool.
So a couple of things that I like to point out. I'll stop the video sometimes during the presentation. I'll say, look, guys, average funeral costs $15,000, just like we went over on the paper here. And just opening and closing the grave, just digging the hole, $1,000, right? And as it's playing, I'll say, it's just gonna keep going. I typically I let it roll, but I was stopping it so you guys can see. As I was showing you guys earlier, the average funeral today is 10 to 15,000. Over the next 20 years, we're expected to at least be at 30, right? It's inflation. There's nothing we can do about it, right? Even the material was used to make this table double every 20 years, right? Now, this next part is very interesting because you consider when we pass away, guess how much Social Security gives you? Right there, $255 death benefit. And that's if you qualify. That's what funerals cost when they first start giving it out. They never increased it since. It's like some flowers nowadays, right? So guys, the rest of this video, right, goes to say a lot of our members have stuff set up through their work, but they retire and most of it goes away. So they say, who would pay for those final expenses? Would it be your spouse? Would it be your children? Sometimes it's people's grandchildren. And then how? Well, we hope that they don't try to sell your home, borrow from friends or family. I throw in there or start one of those GoFundMes, right? So what the company did, and I usually have it right here. So what the company did was they developed, dun, 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 your freedom of choice, right? Your freedom of choice. And then I'll basically just throw it out there, and I'll let the video talk about it for a minute. Right after the video plays, let's just skip through the rest of it. After the video plays, before I continue, you gotta recap the video because they don't pay attention during it. If you're playing the video, they're gonna talk to their spouse, they're gonna check on the dog, kids are nagging them, right? All right, guys, the reason why they have me play that video for you real quick, 2 main reasons. One, it actually refreshes you on everything that actually goes into a funeral. A lot of families aren't aware of all the steps. Let's face it, guys. Nowadays, they say a funeral is almost as big as a wedding. The only difference between a wedding and a funeral is a wedding, you could plan it out for a whole year, maybe even 2. A funeral, you got what? 2, maybe 3 days to get everything figured out, right? So now at the worst time of your family's life, the company wants to keep it simple for you. And that's why they created the freedom of choice. You guys gotta get really good at selling this thing. So how this works is at the worst time of your family's life, not if, but when. Joe, Mary would go down to her choice of any funeral home. Now she's not gonna go into that funeral home saying, "Hey, Joe has 30,000. What can I get?" Because then guess what they're gonna charge him? All 30,000, right? So Mary, you're good at negotiating, right? All right. So what you're gonna do is you're gonna go in there and say, "Joe had life insurance. What's the best price I can get for his funeral?" You figure it out. Once you figure it out, you'll fill it in here. Sign it down here like a blank check, hand this certificate over to the funeral home director, and you're done. You don't have to do anything from that point on. Now, keeping in mind, Mary, you just lose your best friend that you've been with for X amount of years at this point. That funeral home, he's going to want paid when? Immediately. He's going to say, "I'm sorry if you're lost, but how are you going to pay for this?" So instead of him bothering you for a check, he'll call this 1-800 number here. They'll send out 2 checks immediately. One for the full cost that was negotiated on the back, going directly to the funeral home. Anything left over, excuse me, will go back to your family within a week in a lump sum, tax-free check to wrap up additional costs, okay? So, Joe, do you have any questions on how your freedom of choice certificate works? No? Mary, do you have any questions on how your freedom of choice certificate works? No? Okay. Guess whose freedom of choice certificate this is now? Theirs. Let's ask them if they have any questions on how their freedom of choice certificate works. Joe, do you have any questions on how your freedom of choice certificate works? It's his now. He told me no. It's yours now, Joe. It's not mine no more. Right? So now, the expert simulator is the verbiage. Okay, don't just say the machine, the thing, the no cost benefit, the needs analysis. No, the expert simulator recommended for you, Joe. Everybody in your age bracket to have $30,000 as a minimum. Don't say up to. Say a minimum of $30,000 to guarantee that your funeral and final expenses will never be a burden to your family again. Right now, you actually have an existing of zero. So the expert simulator showed a need of 30,000, and it actually was recommending making sure that need of 30,000 was taken care of, so your funeral and final expenses will never be a burden to your family ever again. Now, Mary, the expert simulator recommended a minimum of 30,000 as well for you. It's showing right now you actually have an existing of zero. So the needs analysis showed a need of 30,000, and it actually was recommending making sure that you had that full 30,000 taken care of. So if something were to happen to you after something happened to Joe, that wouldn't be a burden to the kids anymore. Let's examine the need for monthly income protection. I typically skip this one. All right, Joe, 5 years of your income came out to roughly around 192. It's showing you have an existing of 110, 100 through your Prime America and 10 through work. So you only have a need of 82,000. The expert simulator was recommending making sure you had that full need of 82,000 taken care of, so you had the full 5 years of income protection. Mary, 5 years for you came out to roughly around 60 grand. It looks like you have nothing, and it actually was recommending making sure you had at least 60,000, because Joe, if something were to happen to her, that's the taxi service, the daycare service, you know, all the running around that Mary does, you know, that can help take care of that. If it ever says, would you like to display ADB products in this offer? If you click yes, it's going to show accidental death for mortgage protection. If you click no, it's going to show term for mortgage protection. So I'm going to click no, and I'm going to hit continue, and nothing came up. You know why? Because of their income. But if there was room, it would have popped up with a term. So now I kind of shot myself in the foot. Basically, you can do your own little thing on the paper form and show, you know, for mortgage protection. Okay. But look, when I hit continue, look what popped up. This is a learning lesson here, the price. And guess what the client's going to see? And you'll see that price. I'm like, holy shit. You know what I mean? Sometimes it's $300, $400, $500 a month, depending on how much money they make. So what I recommend is before you hit that continue, try to pull back the screen and not let them see this. Okay, just stop sharing. And then you have to click next benefit and then continue to get to your super combo. And if you need to add anything, you could add it all right here. Okay. So guys, what we did so far was we went for about an hour. We went over whole life and term. We went over the needs analysis, and then we went over the couple questions on the computer. Why doesn't everyone take a 10, 15-minute break? Go get some coffee, go smoke a square, whatever you guys need to do. And then let's get back in here. Let's role play it for the next hour. I want you guys to pretty much do what I just did and mess up a few times and let us help you. Okay.
Sounds fun.
So we'll do it in groups because we got 6 of us here. So two. And we'll do it in groups and we'll get things situated. Okay. See you guys. What 205? Is that cool? 205. 205. Dead or alive. I'll see you guys soon. I'm gonna send you this email, Elise. All right. Let's gear it up for part 2 of training. Part 2 of training. We put this in at 1%. We're 1% right now.
Oh, you got the bead and high class stuff in here.
That's what we do, man. We fill up garbage cans with junk. All right, so guys, we're gonna do some role playing. It looks like Andrea hopped off. But let's I mean, we can start with Elise. Do you have the PowerPoint on your computer?
Yeah, I have it.
Why don't you pull up the PowerPoint and ladies first, and then we'll run through it all together, all right? It should take each of us like at the most 12 minutes. You know what I'm saying? Like, okay. All I want you to do is terminal life, and then the needs analysis, and then we'll be good with that, all right? Because filling out the EF, you just have to have it on your computer and it's just answering questions, okay? So ladies first, whenever you get everything pulled up, we're all gonna sit here and judge you. So we'll write down the goods, some things that we can work on. And you know what? Why don't we split up a little bit? Why don't you two go do a couple? You stay in here with us. Once you each do one, then we'll rotate, and everyone should be able to do 2. Cool? So like that back training room, but just go through terminal, because you guys do your own stuff that's not all virtual as well. So terminal, and then your needs analysis, how you break that down. And just go over with each other. Say, hey, you did good on this and this, but let's work on this next time. And then one time with each, and then we'll rotate through, all right? And then just come in the room when you're done. Cool? And then Dalton, you stay with me. All right, cool. And Danny, me, you, and Elise.
Awesome.
All right, cool. That'll be good. This way we can get through it quicker. Get out to you or sure. Well, I got
Okay. What exactly do you want me to have pulled up here?
do you have your